pretty aggressive analysis on RZLV AI. The ticker is RZLV.
It's a great place to start because this is a name that has seen just phenomenal volatility. I mean, it's dropped dramatically from its highs.
Right. And that volatility is really the setup for this whole story.
Exactly. The stock has been, beaten down pretty hard. But this analysis we're looking at argues that the current dip, which was around, 287 on January 2nd, that's a deliberate accumulation zone.
Even though it was up like 11% that day?
Yes, but you have to zoom out. That's just one day. The bigger picture is a fall from its 52-week high of around $8.45. You're looking at a stock that lost almost 2/3 of its value.
Wow. And that's the whole mission of our deep dive today, to unpack this thesis that says this low price isn't a disaster at all. It's a golden opportunity.
A golden opportunity, yes. And it's not based on some vague market feeling. It's because of a very specific and looming catalyst.
Something that's happening on a specific date.
A very specific date, January 13th, 2026. This analysis suggests that one event is going to completely change how Wall Street values RZLV.
And the conviction is high. The report we're drawing from cites some, extremely bullish analyst price targets. We're talking an upside of up to 275%.
Which would push the stock well north of $10 a share. So to really get that, to absorb that level of optimism, we first have to understand why the market hammered it in the first place.
Let's do that. That historical drop from over $8 down to a low of about $2.59, that creates real fear. What were the specific worries driving that sell-off?
It's a classic cocktail of anxieties you see with small-cap, high-growth tech. First and foremost, the worry is cash burn.
Right. How fast are they spending money to grow?
Exactly. These innovative AI companies, they need huge investments to scale up, and the market gets very nervous about how quickly their capital reserves are, draining.
And the second part?
That would be the general early-stage risks. The uncertainty that just comes with any growth-focused company that hasn't proven its long-term profitability yet. The market is just deeply skeptical until the revenue becomes undeniable.
And that skepticism pushes the price down until eventually it hits a floor. The report points to a really interesting technical detail from January 2nd.
It does. It says the stock showed this specific sign of resilience. It refused to drop below $2.60.
And in technical terms, that's important.
It's crucial evidence. The analysis suggests that 260 is now holding as double bottom support.
Okay, break that down. What's a double bottom?
Think of it like a price floor. The stock tested that low price, it bounced, then it went back down and retested it, and it held firm again. 2 tests, 2 holds.
So psychologically, what does that pattern tell you?
It signals a couple of things. First, that the panicked sellers, the ones worried about cash burn, they're exhausted. They've been flushed out of the stock.
Yeah.
But more importantly, it signals that sophisticated, aggressive buyers, we're talking institutional investors, maybe large funds, they've identified 260 as the bargain price. They're stepping in and accumulating shares.
Which suggests they believe the worst is already priced in.
And that the stock is trading at a massive, unsustainable discount. It's a technical sign that the tide might be turning.
So that's the technical side of it. But now we have to shift. Because the real core of this whole argument hinges on that one specific date you mentioned. Tuesday, January 13th, 2026.
Yes. This is what the analysis calls the huge catalyst. And this is where the story gets really, really intriguing.
Because of the event they're hosting.
Well, yes. RZLV AI is hosting a special analyst and investor call on that day. That part is routine. What is absolutely not routine is the explicit public goal that management has set for this meeting.
And that goal, quoted in the analysis, is to reset expectations.
Exactly. Now, to anyone who follows the market, that phrase usually means one thing.
Bad news.
Bad news. It's corporate code for, we're about to lower our forecast, so please don't tank the stock too much. It's usually about managing a disappointment.
But this analysis says that's not what's happening here. It says this is the exact opposite.
It argues it's corporate reverse psychology. They are using that phrase to prepare the market for a massive, immediate, upward recalibration of their entire value.
That's a bold move. I mean, if they're so confident, why not just pre-announce the great news? Why play these word games?
That's the million-dollar question. And the analysis claims the answer is that management is saying their contracted revenue for 2026 already exceeds Wall Street's current estimates.
Wait, say that again. Not projected revenue, contracted revenue.
Signed contracts. In the bag, they're essentially saying your models are fundamentally wrong and we have the paperwork right here to prove it. They're trying to manage the shock of the news.
That is a level of confidence you rarely see.
Yeah.
So let's talk numbers. What kind of revenue are they expected to guide toward that would justify all this?
The report projects that the company will guide toward revenue somewhere between $180 million and $200 million for 2026.
And that 200 million figure is the key.
That's the crucial number. If they confirm that, based on revenue that's already contracted, RZLV instantly shifts from being a speculative, cash-burning startup to a company with confirmed accelerating scale.
Which brings us to the fundamentals. Let's talk about what RZLV AI actually does. It's not just another chatbot, right?
No, not at all. The technology targets what they call Zone 1 commerce. To put it simply, they are trying to perfect what some call brain commerce.
Brain commerce, what does that mean?
Well, most e-commerce today is Zone 3. You see something you like, you have to remember it, go to a website later, search for the product, click, add to cart. There's a ton of friction.
And RZLV's goal is to eliminate that friction.
Completely. Their tech allows you to turn any image or audio cue on your phone, a product in a video, a song in an ad, into an instant checkout link. They're collapsing the distance between seeing something and buying it.
So if you see a billboard or hear a product mentioned in a podcast, like this one, their tech could trigger a mobile checkout right then and there.
0 clicks. From awareness to purchase instantly. And that is a huge market opportunity. They're solving the "I'll buy that later" problem that costs retailers billions.
And this fundamental case gets a lot stronger when you look at their partnerships. The report mentions deep integration with Microsoft. How important is that?
It's a critical validation point. I think it's something the market has completely missed in all the small cap panic.
Why? What does the Microsoft partnership signal?
It signals a few things. First, reliability. Microsoft doesn't partner with unstable or unscalable tech. Second, it's about distribution. Integration opens up RZLV's platform to a massive network of enterprise clients who already trust the Microsoft ecosystem.
So it's like a seal of approval and a sales channel, all in one.
Precisely. It de-risks their sales cycle significantly. It makes that $200 million guidance number much more believable because their platform is already validated by a global tech giant. It changes the perception from startup risk to strategic enterprise growth.
Okay, so let's connect that back to the valuation gap you mentioned. If we believe they're about to confirm guidance toward $200 million, what does dirt cheap actually mean in numbers?
It means the stock is trading at a massive discount to its peers in the AI software space. Right now, RZLV's market cap, when you compare it to its expected 2026 revenue, is just disproportionately low.
Can you put some multiples on that for us?
Sure. Other high-growth AI software companies, they might trade at, say, 7x to 10x their forward projected revenue. If RZLV confirms $200 million and the market just applies a conservative 4x multiple, which is half the peer average, the stock price should be substantially higher than it is today.
And where is it now?
The current price implies the market is valuing that future contracted revenue at something closer to 2x or 3x. That gap is just too wide for a company with this kind of validation. It's why the analysis calls it a golden opportunity.
And it's not just this one analysis, right?
Yeah.
The report points to external validation from Wall Street analysts as a key part of the thesis.
That's right. The backing is extremely strong. We're looking at a strong buy consensus. And what's maybe most striking, especially for a volatile stock like this, is that every single analyst covering it rates it a buy.
0 dissent.
0 professional dissent on the company's direction, even with the scary stock price action we've seen.
That's a huge vote of confidence in the underlying business, regardless of temporary market panic. So what are the actual price targets? What's the potential upside here?
The numbers are very compelling. The average price target cited in the analysis is around $10.79.
Which from under $3 is massive.
Yeah, it's massive upside if this guidance reset plays out like they expect. The high-end target, for the most optimistic scenario, is around $15.75.
A potential 5-fold return. But the report also talks about a margin of safety.
It does, and this is key. The risk-reward is skewed heavily positive because even if RZLV only hits the absolute lowest analyst target, let's say it's $7, that still represents a potential 2x return from where we are now. That $7 floor really underscores the safety of this entry point.
So we have the fundamental catalyst set for January 13th. We have technical support holding around 260. For people tracking this, what's the key technical level to watch that signals the pessimism is finally breaking?
The analysis gives a very specific price level. If the stock can break above it and hold, that's the signal that momentum is catching up to the fundamentals.
And that level is?
The 200-day moving average, which is cited as being right around $3.07.
Which is basically the long-term price trend barometer, right?
Exactly. When a stock is trading below its 200-day, it's seen as being in a long-term downtrend. It's a sign of fear. If RZLV can clear and hold above 307 before the 13th, the analysis suggests that's the trigger that could send the stock rapidly toward $5. It would be a huge sign that the fear trade is officially over.
It really does seem like a classic setup. Management feels the market is completely mispricing their confirmed business, so they engineer a major event to force a correction.
The fear created the deep value. And now there's a known catalyst designed to correct the market's misunderstanding, which really leads us to the broader implications of this whole thing.
Go on.
I mean, think about it. The management team is strategically trying to reset expectations because their contracted business already proves Wall Street is wrong. They're basically telling the market, we are tired of being misunderstood.
You don't usually do that unless you are overwhelmingly confident in the numbers you're about to drop. It suggests they're worried the market just isn't connecting the dots.
Exactly. They aren't connecting the Microsoft partnership, the signed deals, and the future revenue. Management wants to make sure the message finally lands, and lands hard.
Which raises a final question for you, the listener, to really think about.
Right. If a company is this aggressive and this transparent about a massive guidance shift, how quickly can the market actually absorb that? Does the stock jump to $7 or $10 overnight, or does the market take time to digest this new, much higher baseline? Exploring that relationship between proven, contracted revenue and the market's psychological ability to adjust, well, that's where the real insight is. You're not just tracking a stock, you're watching management play a calculated chess move against market pessimism. And that January 13th call, it could be checkmate.